Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Everest Medicines Limited annual report. Everest Medicines Limited is a biopharmaceutical company that specializes in the discovery, development, and commercialization of therapies and vaccines for critical unmet medical needs in Greater China and other Asia-Pacific markets. The company's pipeline includes several promising treatments, such as Nefecon, an oral formulation of budesonide for immunoglobulin nephropathy (IG), and Xerava, a fully synthetic fluorocycline intravenous antibiotic for various infections. Taniborbactam, a beta-lactamase inhibitor, is in Phase 3 clinical trial for serious bacterial infections. Everest Medicines also has etrasimod, an oral selective sphingosine 1-phosphate (S1P) receptor modulator, which is being tested for moderate to severe active ulcerative colitis. Additionally, the company offers zetomipzomib, an immunoproteasome inhibitor, for immune-mediated disorders such as lupus nephritis. The company's pipeline also includes Evrone, a covalent reversible Bruton's tyrosine kinase (BTK) inhibitor, which is being tested for renal diseases. Furthermore, Everest Medicines offers mRNA platform therapeutic vaccines for cancer and autoimmune diseases, as well as EVE-ART-106, a polymyxin derivative designed to treat FMDR gram-negative bacterial infections. Overall, Everest Medicines Limited has a diverse range of treatments in various stages of clinical trials, aiming to address critical unmet medical needs in Greater China and other Asia-Pacific markets. Everest Medicines Limited market capitalization of $14 billion is materially smaller than most of its industry peers of roughly $26 billion. Everest Medicines Limited trades at a higher price-to-book ratio of 2.81 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 18% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are primarily driven by the performance of key products. Nefecon is a significant growth driver, with 142% year-over-year growth, and expected to remain a key near-term growth driver due to continued expansion across core and non-core markets. Xerava also contributes to revenue growth through significant patient demand and market expansion, as well as increased approval and adoption in new markets. VELSIPITY has the potential to become another blockbuster launched by the company following Nefecon, with commercialization efforts underway in Singapore. In addition to these product-driven growth drivers, the company's mRNA programs, including EVM16, EVM14, and EVM18, are advancing through clinical development, which could also contribute to future revenue growth. Strategic partnerships, such as those with NovaBridge Biosciences, Hasten Biopharmaceutical, and MICOT, may also play a role in driving revenue growth. Overall, the company's revenue growth is driven by a combination of product performance, clinical development, and strategic partnerships. The net income of the company underwent a significant transformation between different periods. Initially, on page 32, it is reported that the net loss decreased from RM 1,041.4 million to RM 197.8 million, indicating an improvement. However, this trend was not consistent as seen in page 193, where the net income increased from RMB 43,000 398,000 in 2024 to Rm 140,000, 209,000. The profit margins of the company also experienced a decline. On page 9, it is mentioned that the gross profit margin decreased from 74.6% to 69.3%. This trend was consistent with another report on page 32, where the gross profit margin dropped from 74.6% to 69.3%, and excluding amortization of intangible assets, it fell from 82.9% to 74.1%. The reasons behind these changes are attributed to several factors. On page 32, it is stated that the decrease in gross profit margin was due to the National Reimbursement Drug List, NRDL, of NEFECON, and an increase in distribution and selling expenses. This indicates that the company faced challenges related to reimbursement policies and operational costs, which negatively impacted its profitability. The company's operating cash flow has been a subject of mixed interpretation. While certain sections of the report suggest that it is generating positive operating cash flow, others indicate negative or unclear results. On page 40 and 69, it is explicitly stated that the company is producing positive operating cash flow. Additionally, pages 117 and 201 provide numerical evidence to support this claim, with calculated operating cash flows of RMB 959,917 and net operating cash flows of RMB 1,939,412 respectively. However, other sections of the report present a different picture. Pages 38 and 39 indicate that the company is using more cash in its operations than it generates, resulting in negative or unclear operating cash flow. Furthermore, page 116 shows an operating cash outflow of 92,560 RMB0 for 2025. This inconsistency raises questions about the reliability of the data and the accuracy of the conclusions drawn from it. In conclusion, while there is some evidence to suggest that the company is generating positive operating cash flow, the mixed results across different sections of the report make it difficult to draw a definitive conclusion. Further analysis and clarification are needed to determine the company's true operating cash flow situation. The company's debt level has undergone significant changes over the past year. Initially, there was a decrease in debt from RMB 443,842 to RMB 74,435, indicating a reduction of RMB 369,407. However, subsequent pages reveal an increase in total debt from RMB 499,694 million in 2024 to RMB 866,553 million in 2025. Furthermore, borrowings increased significantly from RMB 503,053 in 2024 to RMB 961,818 in 2025. Regarding interest expenses, the information is somewhat inconsistent across different pages. However, it appears that interest expenses have generally decreased or remained stable, except for a slight increase of 14.7% from RMB 20,341 to RMB 23,273, as reported on page 197. This exception aside, the overall trend suggests a decrease in interest expenses, with some instances showing a year-over-year increase that is not significant enough to alter the general downward trend. The company has shown promising performance across various regions and segments. In China, regulatory approval was granted for VLSIPITY, marking a significant milestone. The Greater China region, along with Singapore, South Korea, and Southeast Asian countries, saw an expanded presence through an exclusive license agreement for VI-101. This expansion is expected to drive growth in these markets. The global pipeline also holds promise, particularly with Everest in primary membranous nephropathy, PMN, which is seen as a key growth driver. Furthermore, the renal portfolio has been strengthened through exclusive license agreements for Mtone 1013 and LEROCHOL. These developments indicate a strong performance across multiple fronts, positioning the company for continued growth and success. Management is optimistic about the company's outlook, driven by significant revenue growth and successful launches in new markets. The company has identified several key areas of focus, including the development of Everest, a next-generation BTK inhibitor with potential best-in-class characteristics for treating autoimmune renal diseases. The company plans to expand its Asian footprint, and enhance patient access to medicines through successful launches in new markets. Regulatory approval is expected for non-invasive GDIG-AON diagnostic test in 2026, and the company will present detailed phase 1 billion/2A clinical study data of Eve Roan at international medical conferences. The company is also establishing a new therapeutic vertical in cardiovascular disease through strategic agreements and leveraging its existing commercial platform to establish full lifecycle commercialization capabilities. Additionally, it plans to initiate NRDL negotiations for XCRAVA in the second half of 2026 and advance local production plans. Management expects to use proceeds from top-up placement to accelerate development of innovative pipeline and proprietary egg-enabled mRNA platform. The company is poised to drive both commercialization and innovation, delivering greater value to patients and shareholders. The company's long-term strategy includes targeting annual revenue exceeding RMB 15 billion by 2030 and expanding product pipeline through in-licensing and out-licensing opportunities. It will execute a disciplined business development strategy aligned with its 2030 roadmap and focus on core therapeutic areas, including cardiovascular, autoimmune, ophthalmology, and critical care diseases. Overall, management is confident about the company's outlook and plans to drive growth through strategic initiatives, pipeline expansion, and commercial execution. The company's financial performance and shareholder distribution policies are reflected in its annual reports. According to the provided summary, the company has a history of paying dividends. Despite not declaring or paying a dividend for the year ended 31 December 2025, the overall trend suggests that the company does pay dividends. A closer examination of the information reveals conflicting statements regarding dividend payments for the specific year in question. However, based on the clearest statement, it can be concluded that the company has indeed paid dividends in the past. This indicates a commitment to returning value to its shareholders through regular dividend distributions. There are concerns about inventory buildup in certain areas of the business. A review of key pages reveals that on page 9 and page 32, no such concerns were mentioned. However, a closer look at page 180 shows an increase in raw materials from 0 to 15,787, indicating a potential issue with inventory buildup. This suggests that while there may not be widespread concerns about inventory buildup, it is a specific problem that needs attention in certain areas of the business. That concludes the financial summary for Everest Medicines Limited. Feel free to comment below, and I will be happy to answer them when possible.